In this video, we're comparing LLCs and S Corps in high tax states, like California and New York, to help you decide which structure makes the most sense. What's going on, everyone? My name is Eric Hunsaker, and here we cut through the fluff to help make business decisions and tax decisions simple. So you've probably heard business owners claim massive tax savings from forming an S Corp, or that California punishes LLCs with high fees while S Corps get a break. The truth is a little more nuanced, and the right choice depends on your situation. So by the end of this video, you'll understand the key differences, state-specific rules, and how to pick the structure that can save you money and stress. General differences between LLCs and S Corps. So understanding the general differences helps you see how state taxes impact each structure. Self-employment tax versus payroll taxes. So LLC owners without an S Corp election pay self-employment tax on all profits. That means they pay both the employer and employee portions of Social Security and Medicare taxes, 15.3%, up to the annual wage base. S Corp shareholders pay payroll taxes only on the salaries they pay themselves. Additional profits distributed as dividends are not subject to self-employment tax. So this can result in significant savings once the business earns more than a reasonable salary for the owners. Formalities and administration. LLCs have fewer ongoing formalities. There is no requirement for formal meetings or minutes, though best practice is to keep some records. S Corps, whether formed as corporations or LLCs electing S Corp status, must follow corporate formalities, adopt bylaws, hold annual shareholder meetings, maintain minutes, and record major decisions. S Corps must also run payroll and file payroll tax forms. Eligibility and flexibility. LLCs can have unlimited members of any type: individuals, corporations, other LLCs, foreign citizens. S Corps are limited to 100 shareholders, all of whom must be U.S. citizens or residents and cannot be owned by other corporations or most trusts. LLCs offer flexibility in profit allocation and management. S Corps must distribute profits according to share ownership. State-level taxes and fees. Here's where the high tax state factor comes in. States impose different fees and taxes on LLCs and S Corps. Some states charge annual franchise taxes on both entities but apply different rules. Others levy gross receipts taxes or flat minimum taxes. These fees, combined with federal tax considerations, determine which structure is more cost-effective. California, the poster child for high business taxes. California is known for its beautiful coastline, tech hubs, and high taxes. Businesses face an array of state-level fees and taxes that influence entity choice. California LLC fees and taxes. Annual franchise tax. California LLCs must pay an $800 minimum franchise tax each year, regardless of profits. This tax applies even if the LLC is losing money or inactive, unless you're exempt in the first year under specific circumstances. It is due by the 15th day of the fourth month after the LLC forms, and then annually. Gross receipts fee. In addition to the $800 franchise tax, California imposes an LLC fee based on total income, or gross receipts, derived from or attributable to California. The fee is $0 for income under $250,000, then ranges from $900 to $11,790 as income increases. For example, if your LLC earns $500,000 in gross receipts, the fee is $1,800. At $1 million, it's $3,000. At $5 million, it's $11,790. State income tax. LLC owners pay state income tax on their share of profits at their personal rates. California's top marginal personal income tax rate is among the highest in the country, 13.3% as of 2025. This tax applies regardless of whether the LLC is taxed as a partnership, disregarded entity, or S Corp. California S Corp taxes and fees. Minimum franchise tax. S Corps in California also pay the $800 minimum franchise tax, with the same first-year exemption under certain conditions. S Corp income tax. California levies a 1.5% income tax on net income of S corporations. This tax applies regardless of profits. There's no gross receipts fees for S Corps. For example, if your S Corp's net income is $200,000, the California S Corp tax is $3,000. 1.5% of $200,000 plus the $800 minimum tax. Personal income tax. Shareholders pay personal income tax on their share of S Corp income in California. There's no double taxation. The 1.5% tax is on the entity, and the income flows through to the shareholders, who then pay personal tax. So this effectively results in two layers of tax. a small entity level tax plus personal tax, but avoids the LLC gross receipts fee. So which is better in California? It depends on your profit and your revenue. If your LLC has high gross receipts but relatively low profits, the gross receipts fee can be burdensome. An S Corp might be cheaper because it pays only 1.5% of net income plus the $800 minimum. However, if profits are modest and gross receipts are below $250,000, the LLC fee is zero, making the LLC cheaper. Additionally, S Corp owners must pay themselves reasonable salaries, which increases payroll taxes. LLC owners avoid payroll but pay self-employment tax on all profits. So the savings hinge on whether the S Corp's payroll tax plus the 1.5% tax is lower than the LLC's self-employment tax and gross receipts fee. Running numbers with your accountant is essential. New York, a mix of state and local considerations. New York State and New York City impose taxes that influence entity choice. Let's examine how LLCs and S Corps fare. New York State, LLC taxes and fees. Filing fees. New York requires LLCs to publish a notice of formation in 2 newspapers, one daily and one weekly, for 6 consecutive weeks. This publication requirement can cost $500 to $1,500 or more, depending on the county. After publication, you file a certificate of publication with the state. This is a one-time cost, but unique to New York. Filing fee based on gross income. New York LLCs taxed as partnerships must pay an annual filing fee based on New York source income. The fee ranges from $25 to $4,500. For example, if your New York source gross income is $500,000, the fee is $500. At $1 million, it's $1,500, and at $25 million, it's $4,500. Personal income tax. LLC members pay New York State income tax on their share of profits. The top marginal rate is 10.9% as of 2025 for income over certain thresholds. NYC residents also pay a city income tax between 3.078% to 3.876%. New York State S Corp taxes and fees. State entity level tax. New York S Corps generally do not pay a corporate level income tax. However, they must pay a filing fee similar to LLCs based on New York source income. The fee ranges from $25 to $4,500. In New York City, S Corps are subject to the city's general corporation tax unless they qualify for S corporation status at the city level, which requires a separate election. Many small S Corps pay NYC tax, which can be around 8.85% of taxable income. Personal income tax. Shareholders pay state and city income tax on their share of S Corp profits. Publication requirements for corporations. So LLCs, New York corporations, do not have to meet the expensive publication requirement. This can make S Corp formation cheaper in some counties. So which is better in New York? The choice depends on location, state versus city, income level, and the publication requirement. In New York City, S Corps may pay city corporation tax while LLCs avoid it. If you're outside New York City, S Corps can avoid entity level tax altogether, but you'll need to consider the state filing fee and the self-employment tax savings. Meanwhile, LLCs must meet the publication requirement, which is significant in some counties. So evaluate both state and local taxes with your advisor. Other high tax states. So a quick overview. While California and New York get the most attention, other states impose notable taxes or fees. So let's briefly examine a few. New Jersey. New Jersey LLCs pay an annual report fee of $75, but no entity level income tax. Owners pay state income tax on their share of profits at rates up to 10.75%. S Corps in New Jersey are subject to corporation business tax, but there's a special S corporation tax rate. Currently 1.33% on net income up to $50,000, 2.56% up to $100,000, and 3% above $100,000. S Corp owners also pay personal income tax on their share. LLCs avoid the S Corp tax but must pay self-employment tax on all profits. Massachusetts. Massachusetts LLCs pay an annual report fee of $520, $500 plus a $20 processing fee. LLCs taxed as partnerships owe a 4% entity-level excise tax on income derived from Massachusetts sources. Members then pay personal income tax on the income. Massachusetts S Corps with gross receipts over $6 million pay a 3% entity-level excise tax. For gross receipts between $9 million and $15 million, the rate is 2%. For under $6 million, it's 0.45%. Plus, S Corps pay a minimum excise of $456. Choosing between LLC and S Corp depends on your income and your gross receipts. Tennessee. Tennessee levies a franchise tax and an excise tax on LLCs and corporations. The franchise tax is 0.25% of the greater of net worth or real intangible property with a minimum of $100. The excise tax is 6.5% of net earnings. However, single-member LLCs disregarded for federal tax purposes are also disregarded for the state's excise tax. This can make single-member LLCs appealing. S Corps are subject to the excise tax, but may exclude certain income. Because Tennessee does not have a personal income tax on wages, the S Corp's payroll tax savings can be meaningful. Washington state has no income tax, but it imposes a business and occupation tax on gross receipts. LLCs and corporations pay this tax, though the rate depends on the business classification. S Corp owners also pay B&O tax through the entity. Because there's no personal income tax, self-employment tax savings may be less significant. Entity choice may hinge more on administrative preferences and federal taxes. Factors to consider when choosing between an LLC and an S Corp in high tax states. So, given these complexities, how do you decide? Well, here's a framework. Number 1, profit level and salary needs. S Corp savings come from paying yourself a reasonable salary and taking additional profits as dividends. If your business profits exceed what you'd reasonably pay yourself, then an S Corp can save self-employment taxes. If profits are modest, the salary might consume most or all of the profits, eliminating the benefit. 2, gross receipts versus net income. States like California tax LLCs based on gross receipts. If your business has high revenue but low margins, for example, a product business with thin margins, the LLC fee can be significant. An S Corp, taxed on net income, may result in lower state taxes. Conversely, a service business with low gross receipts but high profit margins may not be heavily impacted by gross receipt fees. 3, administrative costs and compliance. An S Corp requires payroll, corporate formalities, and additional tax filings. These can be handled by software professionals, but there's still a cost. LLCs are simpler, but still require separate bank accounts and record keeping. So weigh the time and cost against potential tax savings. 4, state-specific taxes. Research your state's rules. Franchise taxes, gross receipts fees, filing fees, excise taxes, and any special S Corp taxes. Each state's different. For example, California's 1.5% S Corp tax and $800 minimum versus the LLC's gross receipts fees. New York's LLC publication requirements versus the possibility of New York City corporate tax for S Corps. 5, future plans. Are you planning to expand, take on investors, or sell the business? S Corps have shareholder restrictions and one class of stock, which can limit investment options. C Corp status is often required for venture funding. LLCs are flexible but might require restructuring later. Consider your growth trajectory. 6, personal income tax and deductions. State personal income tax rates and deductions impact your take-home pay. High marginal rates reduce the benefit of pass-through income. Evaluate whether you can take advantage of the qualified business income deduction or other state-level incentives. Now, if you need help getting set up with either an LLC or S Corp, we recommend LegalZoom. LegalZoom is super easy to use and it takes care of all the paperwork for you so you can just focus on running your business. Links down in the description to get started with LegalZoom. So choosing between an LLC and an S corporation in high-tax states requires a careful look at your specific numbers and your goals. LLCs offer simplicity and flexibility, but they may face high fees or taxes based on gross receipts or state-specific rules. S corporations can reduce self-employment taxes, but introduce payroll responsibilities and, in some states, entity-level taxes. States like California and New York have unique rules. LLCs pay gross receipts or publication costs, while S Corps pay franchise or corporation taxes. The decision often depends on your profit level, revenue, administrative capacity, and future plans. The best approach is to calculate both scenarios with your projected income. Talk to a tax professional who understands your state laws, and consider your long-term vision for the business. Will you bring on partners, seek investors, or remain a solo operator? Armed with this information, you can choose a structure that minimizes taxes, complies with state requirements, and supports your growth. Now, if you want to get started with setting up your LLC or holding company, you'll find links to do so down in the description. These are affiliate links, which means we earn a small commission when you use them at no extra cost to you. And these commissions really help support the channel and allow us to continue to create free content just like this. So if you end up using them, we thank you so much in advance. And if you found this video helpful, don't forget to like, subscribe, and hit that notification bell so you never miss another video. Here on the LLC Deals channel, we cover everything you need to know about forming, managing, and scaling your LLC or holding company plus smart tax strategies and business tips to help you grow. So be sure to subscribe. But other than that, thank you so much for watching, and we'll see you here in the next video.